So there is a fundamental conflict between Indian owner management driven kind of company and a professionally managed company like Hindustan Lever or Nestle, where the ownership is different from management. So the management is appraised on how much dividend you send from here. So they would pay out dividend irrespective of what is the dividend distribution tax. Dividend distribution tax is 25%, they will still pay out. I mean, Colgate has been paying, even when tax rate was 70-80%, they're paying full dividend. But here, if I am a Indian owner and manage the company, I would think that why should I pay out dividend? Because I'll be paying, whenever I pay 100 rupees, 20 rupees is taken by government. And also the minority share, say if I am owning 50%, 50% of the undistributed profit also stays with me. So I have double benefit. One, I am cheating the government by not paying 20%, and second, I am also holding 50% of the minority shareholders' profit with me. So on the whole, it's much better for me not to pay out than pay out. So I think it is very difficult to make government understand, and in fact, instead of bringing it down, they have actually increased it. So anyway, I think we'll make further representation, and maybe I'll speak to Mr. Sinha or somebody. But I think this is a very anti-investor budget. Very, very. This one thing, because what do you get? You don't get anything at the end of it. You get only dividends. This capital appreciation is because of the dividends, let me tell you. The people think that dividend is only 1 or 2%, and bulk of it is the capital appreciation. But capital appreciation comes to the companies which pay dividend. So the starting point is dividend, not the end point. It is not a side point. A cow for the milk, it's like having a cow which is very fat and beautiful looking, but doesn't give milk. What is the value of it? Zero. If there is a hen and doesn't give egg, what is the value? Zero. Like that, if there is a stock which fundamentally doesn't give dividend, the value will be significantly lower. So governments must understand this. I think we have to work much more deeper, and in every forum, I would urge you to, wherever you can impact, please raise your voices. So having said this, let's come to the, my understanding of investing, which will take in 15-20 slides. How do you move? Okay. So downs are temporary, ups are permanent. Now, as Mr. Modi has come, we have to see how investing is to be seen in this environment. What happens is, I'm in market for last 30 years, and very rarely you get an opportunity where you can see 4 or 5 years of what could happen to the nation. What could? Nobody knows the future 100%. I mean, one can never. But at times you get a sense that here it is going to be like this. So in 95, 96, first time I saw that that Y2K is going to come. I mean, this has to be sorted out before in next 3-4 years. And hence the opportunity to make money in the technology companies like Infosys, Satyam and all is very high. And all the stocks went almost 50 to 100 times in 3 to 4 years time. That was the opportunity. I bought 2.5% in Mastech, 2.5% in Infosys. They became 40% of the portfolio in 3-4 years. So you made easiest and largest money at that point of time. Now, after 10 years, we got another opportunity like this, when Modi government has come. First time, a majority mandate and a very weak opposition. See, one is that majority mandate they've got. When they wanted 272 plus NDA, they got 272 plus BJP. That itself is a huge difference. And it was known only on 16th of May. Before that, even Mr. Modi didn't know that it is going to be 272 plus BJP. Very fundamental difference. Second, Congress is only 44. It's like Manchester United versus Mohun Bagan. You can score as many goals, you can do nothing. So you have a very, very good mandate. Fantastic mandate for the person who wants to work. Then third, it is not an emotional mandate. This is not my mother has gone away, or I have lost my son, or I lost my father. Hence, give me sympathy wave. He has earned it hard way. It is a competency mandate. we are the freaks in the stock market. We are passionate about the stock market. He is passionate about politics. He wants to achieve something in life. He doesn't have financial ambition. He doesn't have dynastical ambition. He wants to go down the history as amongst the biggest statesmen this country ever had. He wants to build this country probably bigger and better than China, if not some developed country. But for that, you require 10, 15 years of mandate. So he has a 5-year mandate. Please understand this. Like a Y2K, it's a 5-year mandate. He cannot count on 10, 15 years. He gets second term only if he does very well in the first one. And you can't, this country is not going to wait for 4 years for Mr. Modi to perform. He'll be given 6 months, 8 months, 12 months, maybe 18 months. So he has to perform in 12 to 18 months. At best in 2 years. So we are talking about a very, very short term kind of situation. This is an unusual opportunity to invest in the future of this country.